Going over the trades on Tuesday, May 23rd, 2023. The 250K portfolio was down 33.75. 50K portfolio down 600. We're down on the week. We had a small gain yesterday. Down on the month and up on the quarter and up on the year. Our drawdown is minus 15,965. The end of last week, we were able to capture about half of that drawdown back. And we are 3 days left in this trading week. And 6 days left in this month. Tomorrow, there is FOMC minutes. We don't trade on FOMC, the meeting, but these are the FOMC minutes from the May 3rd meeting. So 3 weeks after the meeting, there is the FOMC minutes, which were the kind of the notes taken from the meeting, and they usually reveal what was already known. And so should not be a market mover, but it could. These days, anything is possible. But we still trade. We don't go around avoiding every time there's a news event, because it's just not possible to avoid every news event. There are spontaneous news events, and there are regular economic releases. So the market focuses on different things at different times. And while we avoid FOMC meeting, we don't avoid FOMC minutes. Also, tomorrow is NVDA earnings after the bell, and we are waiting on the debt ceiling. So something will hopefully move this market soon. Let's go over the trades. Interesting price action today. We had a gap down, and then instead of a gap down continuation and then chop, we had a gap down chop. And the first 3 hours of the day were about 56 points in the Nasdaq, highly unusual. And then we had a trend, and then we had the chop. So we had the chop, trend, chop pattern on the downside, which is a fairly rare. We haven't seen this one much lately, where we chop, go down, and then chop. We've seen it on the upside, and the classical pattern is to trend, chop, trend on the upside, or trend, chop, trend on the downside. But the mean reversion of that is the exact opposite: chop, trend, chop. And so that's what we saw today. And the market internals were strong at first, and we lost today because we were biased to the upside. So the initial strength on the market internals, some of the initial price action said gap fill. The market has been filling more gaps than continuing gaps lately, especially on the downside. And so the market is due for some downside, though. So I thought we might, once we did trend down, I thought we might get some more, but we didn't. There was no follow through for the last hour and a half, or the first 3 hours were just extreme congestion. And so let's look at the trades on the day. The S&P strategies were 3 for 8. The highlight was a adaptive moving average, got short at the beginning and held it to the end of the day, plus 1550 on the day. Cobra CT3 tried to capture this dip. This looked like a narrow range where it breaks out the lows and then reverses and goes to the highs, but it did, in fact, follow through the downside. So Cobra CT3 was a loser on the day. Tick count trend minus 1637.50. Tick fader, small gain, plus 6250. Tick count trend, dynamic turnaround, minus 1250. Gap continuation reverse, minus 1025. The opening chop strategy was right at break even, and then tick chop was plus 137.50. And the Nasdaq strategies were 1 for 5. You can see here, when you look at short signals, you can see how there's no follow through. You see tick reversal, got in, the market selling off, bounces a little bit, gets short here, and then the prop up comes in. This market is extremely overbought. The RSI and on the daily charts and all the top Nasdaq stocks are just straight up. Some of these top Nasdaq stocks have doubled on the year since January, and this market is just tightly wound on the upside, pretty unwilling on an intraday basis to try to give anything back. The desire to continue to drive higher seems to persist in this market, and today was a small down day in reality compared to what we've seen, and there should have been a little more follow through based on how far this market has gone higher. But like I said, we're waiting on FOMC minutes, and we're waiting on NVIDIA, and we're waiting on the debt ceiling. Tick count trend had the trend higher with the market internals, and right around minus 50 on the day. Zigzag minus 495 on the day. SR counter trend 2 conservative minus 825 on the day. The only winner on the day was this tick reversal plus 45, very small winner. This was break even. This was a small loss, and these were more significant losers on the day. And so once again, looking forward to a market that has more significant moves. Also looking forward to a trend. Last week we saw this. We saw the chop, trend, chop, and then we saw I think the very next day, trend, chop, trend. And so today we saw, on the downside, we saw chop, trend, chop. Maybe we'll see tomorrow the mean reversion of that, which is trend, chop, trend. So, but the market could go sideways until FOMC minutes. But those are the trades on the day once again for Tuesday, May 23rd, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.